This is a very significant video where I'll be sharing my information about the impending cryptocurrency market bull run, which might help you make a lot of money. Please pay close attention, since the ascent to emphasize is that Bitcoin is expected to reach its historical peak in 2024. The value of Bitcoin experiences a bull run that lasts for about 12 to 18 months, during which it continues to rise. However, this growth is eventually followed by a sharp decline that frequently has a magnitude of 80 to 90%. This pattern has shown that this cycle is recurring, and it's important to understand that this phenomenon has an impact on both Bitcoin and the larger cryptocurrency market. A collapse of Bitcoin always causes the value of 99% of other coins to plummet as well. This video will examine when it makes sense to buy and sell Bitcoin strategically, taking logic into account. This pattern, which was visible in 2017 and earlier cycles, replicated a like arrangement in 2022, laying the groundwork for a recurrent cycle in 2024. Since my goal is to present you with insightful knowledge that may help you protect your investments and generate significant profits, allow me to give you a brief rundown of the condition of cryptocurrencies as of 2023. We are seeing a teaser rally, much to what was seen in 2019. But the important rally, the one that counts, is connected to the happenings with Bitcoin. The most current Bitcoin event occurred in May 2020, and the next one is anticipated to occur in the first half of 2024, according to historical trends. Since it seems sense to assume that Bitcoin would peak in a period of 12 to 18 months after the initial event, we may estimate that the next bull run will peak around the middle of 2025, with a possible deviation of a few months. It is imperative to anticipate the complete four-stage pivot of the Federal Reserve. Regarding the Federal Reserve's monetary policy and its consequences, there is a significant correlation between the stock market and the cryptocurrency market. What happens, therefore, when the Federal Reserve makes a radical change of course and lowers interest rates through quantitative tightening? The results are twofold. First, the economy will grow, which is good news for cryptocurrencies. Second, the U.S. currency will decrease, which is good news for many commodities, including Bitcoins. The financial markets, including the debt and stock markets, are currently under tremendous pressure from quantitative tightening. The real estate market is not immune to its effects. How then could I expect this? I just do a thorough review of the financial markets and economic trends in relation to the operations of the Federal Reserve, then disseminating these observations via this method. Now allow me to present an unquestionable, indisputable fact that is both assured and definite to happen. The dollar's strength is currently extraordinarily robust when compared to other currencies. This condition is a result of the Federal Reserve's widely acknowledged implementation of a stricter monetary policy to counter inflation. Consequently, this presents a challenge for Bitcoin and all other cryptocurrencies, but a shift in the quantitative tightening of the dollar's strength is unavoidable and will eventually change course. The federal government's accumulation of significant debt to finance excessive expenditures is the reason for this shift. The government will find it difficult to make interest payments if these strict monetary policies continue. So a pivot is inevitable, and I predict that this will happen in 2024. In addition, I believe that interest rates will drop, weakening the dollar, and that the Bitcoin event will take place in 2024. This will subtly announce that the next bull run has begun. It's crucial to remember that the actual halving event won't likely be accompanied by lavish celebrations or an instant price spike. Rather, it's anticipated to be a fairly ordinary occurrence by 2025, driven by the supply and demand dynamics resulting from the 2024 halving event and supported by advantageous macroeconomic conditions. Cryptocurrencies will rise in the breeze. Buying cheap and selling at this time is when strategic actions are most important. Particularly, high becomes paramount. The exit date, 2025, is set, providing an opportunity to profit from gains. It is imperative to stress the importance of making wise entries and exits. This is an important word of wisdom. When investing in stocks or cryptocurrencies, it's best to avoid going all in and instead use a staggered strategy called dollar cost averaging for both entering and exiting investments. Proceed with caution if you lack experience in this field. I believe that the next bull run will be extremely profitable and will probably create many new millionaires. But if you have limited funds and want to turn a small amount of money into a sizable fortune, understanding the entry points is crucial. Let me explain how I see things right now. Developed nations like the United States, Europe, and others have become used to low interest rates, which typically range from 0 to 0.25%. This also means that real interest rates are negative. This environment has greatly benefited cryptocurrencies by encouraging an exaggerated risk-taking stance, but it is quickly unraveling. Although it will eventually stabilize, the process won't happen right away. For now, we are still navigating a risk-on landscape, but it is noticeably different from the conditions seen in 2020 or 2021. Capital is gradually shifting towards risk of investments. Meanwhile, we are in a high-interest rate environment that will soon have a detrimental effect on the economy. There will likely be difficulties in the United States. Europe may encounter even more serious problems, and China is working to get back on track. The interest rate is currently 5.5%. What is more concerning is the extended period of high interest rates, which might last anywhere from 6 to 15 months before the Federal Reserve considers lowering them. The Federal Reserve believes that the pivot will take place in 2024, but the market is pointing toward an earlier Fed pivot in 2023. The lead up to this time period could be shorter or longer. It is anticipated that the economy would face challenges due to its gradual deterioration and declining GDP. Increasing rates of unemployment and an increase in bankruptcies dominated the news. These unfavorable developments will undoubtedly have an effect on the cryptocurrency and stock markets. The Federal Reserve's continued quantitative tightening program, which it implemented in 2020, even while the real economy was collapsing, presents a further challenge to these real-world economic issues. The situation has altered for 2023, but the Federal Reserve saved the stock market and gave cryptocurrency a boost by putting trillions of dollars into the economy. Naturally, this extra money found its way into the world of cryptocurrencies. It would be impractical for the Federal Reserve to restart its money creation operations without running the danger of worsening inflation. Given that quantitative easing programs are scheduled for implementation in 2024, it seems improbable that the Federal Reserve will provide help in the near future. Three major developments are what I expect to happen. First, things will only get worse for the economy. And second, no one is expecting the Federal Reserve to do anything in the way of quantitative easing. When conditions improve and the bull run starts, that's the best time to think about converting all or part of your Bitcoin holdings into altcoins. If Bitcoin does decline further, it's probably going to weather the storm better than most altcoins. Put another way, if BTC experiences a decline, altcoins are likely to take a harder hit in terms of percentage loss. ADX, or even a 9x return, may be obtained by purchasing Bitcoin at its lowest point and selling it at the height of the upcoming bull run. But with altcoins, the potential gains could reach 30x, 50x, or even 100 times due to their larger beta in a bull market. The possibilities are endless, but let me stress that this is not a get-rich-quick scheme. To implement this strategy successfully, careful planning is required, and you must be patient for at least 2 to 3 years, a period of time that is long enough for emotions to potentially cause costly mistakes. Now, let's look at the promising aspects of this strategy. The bull run begins in 2024 for a few reasons. First, the Bitcoin event is scheduled for the first half of that year. During this time, supply and demand dynamics impacted by the event will support basic economic principles working in our favor. It's important to note, however, that the effects won't manifest on the day of the event itself due to a lag effect. Instead, in 2024, we can expect an economy on the rebound, which is good news for the markets. Secondly, the Federal Reserve's decision to restart quantitative easing will reactivate the money printers, encouraging a return of capital to risk-on assets. Additionally, quantitative easing will cause the currency to decline, which would benefit cryptocurrencies. This combination of favorable elements creates the perfect storm for launching Bitcoin and other cryptocurrencies into the next bull run. In conclusion, the journey to a $100,000 Bitcoin price has been a remarkable one, filled with volatile shifts, institutional endorsements, and growing mainstream acceptance. As we navigate this dynamic landscape, it's crucial for investors to stay informed, adopt a long-term perspective, and diversify their portfolios responsibly. While the $100,000 milestone may mark a significant achievement, it's essential to remember that the cryptocurrency market is ever evolving, influenced by various factors such as regulatory developments, technological advancements, and global economic trends. Therefore, viewers should continue to engage with our investing tutorial channel for the latest insights, expert analyses, and practical strategies to navigate the exciting world of cryptocurrencies. As we witness Bitcoin's ascent towards the $100,000 mark, it serves as a testament to the resilience and potential of decentralized digital assets. The journey, however, doesn't end here. It's merely a checkpoint in the broader landscape of financial innovation. Whether you're a seasoned investor or just beginning your journey into the world of cryptocurrencies, staying informed and adapting to market dynamics will be key. Join us on Investing Tutorial as we continue to explore the ever-changing crypto landscape, providing you with the knowledge and tools to make informed investment decisions in this exciting and transformative era of finance. If you found value in our insights and analyses on the Investing Tutorial channel, don't forget to hit the like button, subscribe, and share with fellow investors and enthusiasts. By doing so, you not only stay connected with the latest information on Bitcoin and other investment topics, but also contribute to the growth of our community. Your support empowers us to continue delivering quality content, keeping you ahead in the ever-evolving world of finance. So click that like button, hit subscribe, and share the wealth of knowledge with others who are on a similar journey of financial discovery. Thank you for being a part of our Investing Tutorial community.